a bad joke. Dropped at the first sign of trouble. They're only as good as the world allows them to be. I'll show you. When the chips are down, these civilized people, they'll eat each other. See, I'm not a monster. I'm just ahead of the curve.
Welcome to Market Makers, everyone. Your home for tomorrow's TA today. We have a lot to talk about in this Monday video. We have indicators for both the market and the economy telling you opposite things. We're going to get into that. And then the title of the video, how it all ends. I want to go over the elements of a blow off top with you because, as you guys know, I think this bubble cycle will end the same way as every other bubble cycle, with a blow off top. And there's some hallmark elements of a blow off top it would behoove you to understand in these market cycles. Now, if you're watching YouTube or you're on FinX, a lot of people are probably confused because supposedly these people that are these expert traders, they all have different opinions. That's why they keep asking questions. They don't want to be wrong about anything. So they say things like, is this the top? Is this the bottom? Are we in a bull market? Are we in a bear market? Is this a bear trap? Is this a bull trap? Guys, understand nobody's ever going to be 100% accurate about what happens in the marketplace. But if you've been watching this channel in 2025, we've made some awesome calls in this marketplace. Understand, when people are still wondering whether or not there's another low to come in the market is up 16% off the lows. If you've been watching this channel or following me on X at Market Canary, give me a follow there. I showed you where I was accumulating Solana. I showed you where I was accumulating Tesla. Solana's up 65% in 3 weeks. Tesla's up almost 40% in 3 weeks. Understand, these are trades. You can trade this volatility. This channel is a trading channel. So we're going to look at what happens, or what I think is going to happen in the marketplace from here on out as well. And again, these elements of a blow off top. But first, let's cover some of these indicators because they're all over X, right? And I shared this one, the Zweig breadth thrust indicator. Before I get into it, Lee, go ahead and play that video clip, guys. It's 1 minute. We'll talk about it on the other side.
I am super pumped on the Zweig breadth thrust. This means that if you see positive breadth going from 40% to 62% over a 10-day period on the NYSE, 6 months out, you get a double-digit gain. 12 months out, an even bigger double-digit gain. I think the average is 24%. And we've only listed a few of the occasions here. This signal has been triggered 19 times since World War II, and the market has finished up 6 months out and 12 months out, each of those 19 times. So, Katie, it's 100% for the Zweig breadth thrust.
This indicator is 19 of 19, going back to World War II. 19 times it triggered, 19 times it was correct, right? Pretty powerful. 1 year gains, 3 year gains, double digit, with the average being 24% gains in the market. Now, this would paint a very bullish picture. You guys know there's a lot of data about this. Lee, show the 4-day decline chart as well. Throw that up there. So here's the 4-day declines, and look at the 1 year gains and the 3 year gains. Green across the board, right? So again, this would paint a very bullish picture. However, we also have the unemployment rules that triggered, which would tell you a recession's coming. We had the longest and strongest, deepest yield curve inversion in stock market history, telling you there's a powerful recession coming. So Lee, throw up that Bank of America chart once again. So this is the SOM rule indicator, guys. It's just a ripoff of a pre-existing unemployment rule indicator, but this is a SOM rule indicator. Look off to the right. Everything highlighted in red. This shows you that every single time this indicator triggered, it happened prior to the recession, meaning you were already in a recession, and this indicator triggered back in August of 2024. So how can this be? How can you have technical indicators telling you you're going to have double-digit gains a year out, 3 years out, and then have economic indicators saying, hey, you know what? you're overdue now for this massive recession. So that's what we're going to cover in these charts, because you're going to have people on opposite sides of the trade. Hence the fear and greed. You're still in fear. So we're going to look at all these things, all these elements, and I'll give you guys my view of what I think is going to happen and what to look for to know if you're wrong, right? To know if you're just putting in a lower high and the market's rolling over. Conversely, to know if you're right, if you think you're going to a blow off top, what to look for. So without further ado, Lee, let's start the show. All right, guys, be sure to check out our sponsors. They bring you this programming, Bitunix to trade all the cryptos, SimpleFX if you live outside the US. Both exchanges, you get the Market Makers VIP. Information will be pinned in the YouTube comments as well. And check out our freedom-seeking, financial freedom-seeking Discord, marketmakers.trade. I would love to see you guys there. I'm there basically every day. I try to take Saturdays off. Always end up bullshitting with some people in the room anyways. But check that out, marketmakers.trade. All right, so let's go ahead and get into this. Let's start off on S&P futures, right? Again, we're up 16% off the low, and people are still debating, do we have another low coming? Well, you missed the bottom and you missed the big trade. You had the God candle rally, the 9% rally, in a single afternoon, which is an entire year's worth of gains. But let's talk about the cardinal points in the market, because I think these are going to come into play. And I want to look at the historical pattern of this market cycle as well to kind of give us some timing ideas of when the next triggers can be. And I laid it out in some other charts, so we'll go over that, okay? Cardinal points in the market. Spring equinox, fall equinox. I know some of you are laughing because, I've been saying this for years. Just in this market cycle, then we'll go over it historically, just in this market cycle. When I talk about the spring equinox or the fall equinox, guys, we're talking about the 3 weeks surrounding that date, okay? But look at this. Bottom of the pandemic, spring equinox. What about over here? Bottom of the 2022 sell-off, fall equinox. What about over here? Bottom of the 11% retracement, fall equinox. This is just this market cycle, right? And then what do we have that we just did? Bottom of this retracement so far anyways, spring equinox. So we have all these equinox dates that triggered. You had key bottoms here in the marketplace. You also get key tops, such as up here. You had the top in March 2022, right? Spring equinox top. You had this big retracement that occurred afterwards. These are cardinal points in the market. If you want to rewind it now, go to the GFC. When did the market top? Fall equinox, 2007. When did the market bottom? Spring equinox, 2009. What about .com? When did the market top? To the day, spring equinox, March of 2000. When did the market bottom? 2 years later, fall equinox, 2002. Key pivot points in the market. We're going to come back to that. Let's get rid of this and look at some other key dates coming up in the marketplace. When we look at this from a retracement perspective, when have you had big moves in the market? When was your top over here for this 11% drop? July. You guys have heard me talk about the potential for a summer top. What about this 10.5, 11% drop? July top, okay? So again, what are we doing now? We're rallying. We're going to look at this, how it could relay out to a cycle perspective. But when I see this, guys, when I see this happening in the market, your cardinal points in the market, we know the fall equinox will be a pivotal point. The key is, will it be a bottom, meaning do we get a summer top and then a drop into the fall equinox? Or will it be a top in the fall equinox and then this thing starts to unwind? That I don't know. We're going to look at the charts. But let's go back, because one thing that will give you a hint of what's happening in the market is understanding what a blow off top looks like. Let's go back to an equity bubble. Because remember, the GFC wasn't an equity bubble. Market was overpriced. It always is. But it was a real estate financial crisis bubble. But look at this. This is an equity bubble. And you're going to start seeing elements of this in the marketplace when you get these erratic moves in the market, like our 9% candle in a single day. 19% rally for the blow off top in 21 days. Now remember, when you say 19%, that's not that big a deal. The average yearly gain back in 2000 was 8% for the year. 8%. When you start looking at 2.5x, 3x moves in the marketplace, it is an element of a blow off top. When you start seeing volatility before and after this top, a 12% decline, a 19% rally in 3 weeks, and then you have these other moves in the market. You have those two moves. Then you have right after that, a big sell off of 15%, followed by, once again, a big rally to almost come up and make a new all-time high of 16%. The market starts getting really choppy, but the key element is the speed. Understand the speed. This is the market. This is the market. This is equities. This is not cryptos. Okay, when you start looking at 9% moves in a single day like we had 3 weeks ago, 19% moves in 3 weeks, these are big hallmark moves for what you start seeing in high volatility areas and blow off tops. Okay, so that's one thing to understand. And if we go back to this cycle here, where we are now, we're going to look at this broken down as well, okay? So we have our blow-off top target, 7,000, 7,500. We never hit my lower blow-off top target from the original cycle right around that 6,400, 6,500 level. And that's still above us as well. So if we move forward to look at this, what about if there is no blow off top target? What about if it's just a lower high, right? Because this is the other element in the market, the other argument people have. This is it. And I see this all the time. It's all over my YouTube, right? You get these quote unquote experts that come out, guys like Peter Schiff that tell you everything's just horrible and it's just not going to make another high. It's going to fall apart. I get that. And it's not that it's an invalid way of thinking. It's definitely a possibility. I've showed you guys this many times. You have a massive double top that still could form here on the S&P, right? It's all about where is that key resistance. And if we were to just come up like we did, up 16%, roll back over, where are we going? 4,500 would be the next level, taking out the 200 on the weekly. Same thing we did back in 2022. Actually, the same exact movement, big rally up, roll back over, ultimate shakeout, take out the 200, spike back up again. That would be the easiest long if the market does that move, because you're going to get a massive rally after that, okay? So that's a valid way to look at the market too. But let's go ahead and move forward and look at this from a cycles perspective. I want you guys to understand this. So what we're looking at here on this chart, this is the current price action where we are now. If we hold this higher low structure right at that 48.35 where we fell to, if we hold this low down here, this is key, because where's that peak resistance going to be in the market? I told you, right at the 200, right? We're going to build up, come up to test the 200. What are your catalysts? You have trade deals that could be announced. You have earnings for big tech this week. Lots of catalysts that can get you up there and cause some type of volatility, meaning you come up and you pull back. It's that pullback that's the concerning part. You want to hold your higher low structure on the pullback. If you disappoint in earnings, if trade deals, if something bad happens and this thing rolls over, that's when you're going to 4,500, and it changes the timing of a lot of these things. But look at these dates, okay? So we know based on the previous fractal, based on this market cycle, we should have a key pivot date late June to early to mid-July. Key pivot date, right? That next key pivot date is late August into early September. And then, of course, the fall equinox, which has played out late September, early October. These are your key pivots. So what I think is going to happen, again, a forecast, it's not a guarantee. If we come up and test the 200, just like on Bitcoin, we'll go over those charts as well, testing that 100, 102 area, you're going to get volatility and you should get a pullback. How to find these blow off tops. If we're going to make this late June, mid-July, summer high, and that's the top, this needs to be rapid acceleration into that top. And certainly it could be, right? So if we come up, let's just say from where we peaked out so far, if we come up, that's a 17% move up to about 6,500, 6,530 S&P futures. And that would be in 60 days, right? 2 months. So again, this is all going to depend from where we do this move. If we come up from, let's say, down here, if we hold the support level, end of May, right? We retrace into, we come up, we test the 200 here very soon with the earnings. We test it in the next week or two. Then we get a retracement in May. You're selling May and go away, but you hold the higher low. If you get the big rally from this level, again, 19, 20% move, depending what level you hit here, 6,600, 6,500. So you come up to this 18 to 20% move. It's all going to depend on the duration, the speed. How quickly do you do this move? If you get that summer top and you start retracing, so we know that next key low should come in around August, late August, early September, and you rally back up but make a lower high, that may be your blow off top if you get that rapid acceleration into it and get a big move, right? So that may be your blow off top. If it is not, the alternative is that fall equinox could be your blow off top, right? And then you pull back, you accelerate back into that fall equinox, late September, early October. And then if all of this is wrong and other guys like Felix Zulauf are correct, who has now the same targets as me, both of us had a Q1 retracement talking about last year for our prediction for this year. And now he has my same 7,000, 7,500 target, but he's looking at 2026, 2027. So if he's right, then there's something really wrong, right? There's something wrong because we're either not getting a recession at all, meaning you don't get a blow off top, you just get a steady grind, elevated movements up, and you start moving up in the market and you continue to move up. And maybe September, October is nothing more than just a peak, followed by a retracement, and then you start going back up into 2026. Look, all of these are possibilities, but the hallmark of what I want you guys to understand is a blow-off top hallmark is rapid acceleration in a condensed period of time. The likely candidates for this to happen, if we're going to peak in 2025, is your summer top, late June into mid-July, followed by the second likely candidate is your fall equinox, the cardinal point in the market, late September into mid-October. Those are your two likely candidates to get a blow-off top if that's how the market's going to play out. Nobody knows, but these are things that I'm watching in the marketplace. And the key thing is right now is tackling the 200, getting some volatility and seeing if we hold the higher low to move up to the next level. So what's another key element in a blow off top, guys? Psychology. Look at the fear and greed. Markets don't top in fear or in neutral. Remember, at this top, before we sold off, we were in neutral. You top in greed or extreme greed, which is where you would be if we make a blow off top, okay? So remember, this went all the way down to 4, and now we've had a 16% rally. So now you're still in fear, but this is a catalyst-driven market. So looking at this zoomed in on the daily here on S&P futures, quite simply, guys, there's your 200. I've had this pattern drawn for weeks. We talked about the market going to rally off that 50% retracement. You got the God candle, you got the elevated prices, and now you're trying to hold 5,500 for support. Earnings for big tech come in. This can easily come up to target, and this will all therefore depend once we come up to that 5,800 right there at the 200, right at the bottom of our Wyckoff fractal, 5,800, 5,850. Can we hold a higher low? Meaning, do we get volatility up here and we start bouncing around, building a platform, and then break out to the upside? That's what this will depend on. If you cannot, and you come up to this level, you start hitting your head and you roll over, you start giving up these gains, and you take out that low, that 48.35, then you're going down to the 4,500 level, which could easily affect timing, but that's not my primary forecast. My primary forecast is you're going to get volatility and you're going to break through this level and you're going to continue to move up, because I think at some point we're going to see rapid market acceleration, which is how you get a 9% candle in 6 hours, right? You're going to see that element. So that's your key level. Watch 5,800, 5,850. Watch the earnings, because right now, again, you're only 300 points away, guys. Less than 300 points away from testing the 200. I've been telling you for weeks, this is your key resistance. You're not going to crater from down here. right? I said that. You're not going to crater from down here. You're going to come up and test key resistance, and you're on your way to doing that. Looking at US Tech, NASDAQ 100 futures, same thing. Your 200's right around 20,300. You're at 19,363, so about 1,000 points higher. Again, watch Big Tech because that's going to be an easy jump if Big Tech comes in with positive earnings. Watch the test, guys, right around the 200 to just above at 20,700 and see what kind of higher low, if we can hold a higher low in this region, get some volatility and break out to the upside, okay? That's your bullish signal. This could easily happen in confluence with trade deals being announced for India or Japan, some type of market catalyst to get everybody excited. What's the bearish side? You start breaking down below these lows, 17.7. You take out 17.7, you take out 16.5. Neither of these what you're in danger of doing right now, but you take those levels out, you're going down to a deeper level. Looking at Bitcoin at 94K right now. Bitcoin doing exactly what we think it's going to be doing. I would like to see Bitcoin come up to that 100K key psychological level and then start to look at some type of retracement, some type of sideways movement to get the slingshot to the upside. My upside target's 132, 145 on Bitcoin. And when we look at this on the daily time frame, guys, where could Bitcoin, would it make sense if Bitcoin sold off some? Of course, right? It would make sense. You could back test the 200. You could come down into the high 80s, 87, 88K, and start having to move around before you come back up. The key thing is your higher low structure is the key thing to keep that intact, okay? And part of the way we'll know if a blow off top is coming in the markets is how quickly can Bitcoin get to my targets? 132, 145. If Bitcoin starts sprinting up to those levels, the markets are going to follow. Bitcoin's above the 200. It's holding the 200 for right now. Big tech earnings, news catalysts coming out. We'll see if the markets can stay in these bullish configurations because, again, higher prices are ahead. Where are you worried about Bitcoin? Obviously, if you start taking out key support levels, right? If you start dropping below 80K again, if you take out the low of 74K, again, you're at 94K. 94K. Okay, so if you roll back over into the high 80s and bounce around, it is nothing to worry about. It's normal. So we'll see if you can continue to hold a higher low structure. The market structure is clean, guys. Been predicting the breakout. You got the breakout. If we look at Solana, talked about accumulating Solana below 112, all the way down to 89. It got to 95. It's up 65% in 18 days. 18 days. Pretty good return. Guys, give me a follow on X. Check out marketmakers.trade. Next video will be out Thursday. Have a fantastic week, everybody.